a recording to dive into the deep water.
No, they're being recorded.
Let
Okay,
let me know that
I've let you know.
be on my best behavior.
All right, we're live.
We're live.
I'm gonna share my screen.
Be on your best behavior, boy.
Share my screen. Okay, so
Talk
you
to me.
see my screen? Okay.
Yes, sir.
All right.
I see your
So
screen.
so we have already done a deep. Okay, so here's all the different areas that I've broken out these PowerPoint presentations in. We've
Mm-hmm.
already, and I've done like a consolidated deck for each of these areas where it has um, all of the major transactions on one deck. No verbiage, just a configuration point and an image, like a description of the configuration point and a screenshot. We've already walked through it. I've walked through it, getting your expertise and your seasoned input to help me connect the dots. Right. We've already done that for financial accounting global settings. Sorry if it's too
Mm-hmm.
small.
No,
We've
yeah.
done
I
we've
see.
done it for financial accounting global settings, and we've also done it for general ledger accounting for the most part. I say we
Okay.
covered about 95% of those.
Okay.
And today I'm hoping we can go through accounts payable.
Yes.
Okay. And as time goes on, I would hope that we could touch on all of these
All right,
in
sir.
similar fashion. So going into AP, so you see I got decks with verbiage for all these areas, but I got one consolidated deck that has all the points on
Okay.
them.
All righty. Wow. Big dog. Big dogs.
And I
So
also
what?
got, I'm sorry, go ahead.
No, go ahead. So it looks like you have stuff there already, right?
Yes, I
All the
have
configuration points for AP. Is this what this is?
that is correct. And
And
yep, I'm sorry.
go ahead.
No, I was just gonna say that if you wanted to, I could also jump over to the SAP Access if you wanted to
Okay.
look at something in the live system.
Yeah, yeah, yes. Okay. We'll do that too. Okay. So how do you want to approach this? How do I add some seasoning to the discussion?
Well, I'm gonna shut up. I'm gonna shut my whole mouth, open
Mm,
my heart and my mind and my ears and
is
listen
that how
to
you is that how you want to go about it?
yes, I need to hear from Master Barbie.
Mm. So how do we get to the next page then? Let me see what you got here. Let me do an overview. Exists, okay. Business partner provision, okay. General business, alrighty. All right,
Can you
keep
tell?
going. I want to do an overview.
Okay, I'll just siphon through them.
Okay, okay, okay. Is that, well, can you go back
Yes.
to where that list was? Yeah, this guy. Where are we on this list right now?
We are at this,
Alternative GLs?
define alternative reconciliation account.
So we've been through the other pieces, the business transactions?
Yeah,
I didn't see,
so,
I didn't see this menu going through.
right. So each menu, each, it's not necessarily in consecutive order
Oh,
from
okay.
the menu path. So I've organized it right in a way where I can match up the configuration points from AR and AP, the same configuration points, and sit
Mhm.
them right next to each other and memorize them in a similar list, even
Okay.
though they're a bit out of order. But I had to take them out of order to pair them up, and then at the end here I can show you better than I'm saying it. Let me go
Okay.
here. OneDrive, FICO.
You're just looking at it.
Here.
Okay.
So I got these. I got
Uh,
these. I made these lists to make sense out of the configuration points.
okay.
Right.
Okay. So you have that same,
So
um,
if you can see here, this is AR. I mean, this is AP,
mm-hmm,
and this is AR.
mm-hmm,
Everything up to 15. These are the same configuration points in the same
mm-hmm,
order as these 15.
mm-hmm,
The difference being these are customers, right? And these are vendors.
mm-hmm,
But then these last config points, they're exclusive to AP, and these
mm-hmm.
last config points are exclusive to AR.
Okay,
And I
gotcha.
and I actually ordered the decks in the same order just for my own sanity.
Got it.
But it's my own order. It's not SAP recommended order. You know what I mean?
Okay, understood. No, yeah, so
Yeah.
as long as you make sense. So I was just trying to make sure I understood the order when I was
Hmm.
looking at it, it made sense to me or something, already?
Yeah. So they'll be scrambled. You have one point before another and all of these. So
Okay.
yeah,
Okay. So I'll ignore it because you make sense out of it.
yeah. I apologize, sir, for my
No,
yeah.
no, no reason. You no, it just that was my expectation. That's all.
Right. I get it. I should have
No,
prefaced
no.
that.
Moving on. What's the
Would you like
next?
me? Okay, I'll
No,
continue
no, no, no,
reciting.
no, please. No, I was just, okay, now I see. Okay, tolerance limits. Okay. Okay. Mhm.
It's loading. Sorry. Does that sometimes.
Okay.
And we're nearing the end here.
Okay.
Last two should be payment block reason codes.
Payment block reason codes. Okay. And then, okay.
And this should be all she wrote. Yep.
Okay. So what I noticed that I did not see is the most important piece was the payment program.
Ah, that I thank you for bringing that up. Since I have this so how the book broke it down is in bank accounting, they put the automatic payment program, which is all of these configuration points, which I can recite from heart. But
Oh,
that's
okay.
actually part. So when we can cover it now, if you like to, Rod,
No, no, no,
and I
no.
can pull up the bank accounting app, the bank accounting config points, and we can walk through it now if you prefer, or we can save it for bank accounting. It's up to you.
Which one you prefer? How the book did it? But
No,
if you
no,
look at the SAP menu, huh?
I need Rod Barbie recommended. Hey, Rich, you need to look at it like this. I actually had an interview today, Rod,
You
and
did.
this guy, we were talking about accounts payable, and he wanted to talk about um the payment program. And thank
Yeah.
God I had, you know, I studied all of this stuff already, and I was able to link the two things together. But I get what you're saying. They're supposed to go hand in hand, but for some reason, the book decided to separate it into bank accounting.
Okay. I can
So
see. Okay, I can see that. However you want to do it. So what I did see was not much relating to business processing. You know what I mean? Because what you got to do is marry the business process to where are the config points in the making the business process, right? So, uh, do you mind? Yeah, yeah. So I saw a lot of business, the linking together the BP and the vendor accounts.
mhm.
Uh, I saw some alternative ledgers and tolerances and payment terms were all good.
Mhm.
Um, uh, but what you can do is go down the menu of IMG or the accounts payable. I just want to start there on the business process side. So, and then just kind of give you just over. If you can call up this SAP, and then we'll just. And I just want to look at the process side first, right?
Okay.
So if you go in the accounting and go in the accounts payable, just at the menu level. So if you page down here, just uh, just open up the menu like this.
Okay.
So if you let's go and look at each node, and then we'll back out of this. Um, okay, so now I'm just going to talk in general to this. So as you can see in each of these nodes on the payment, you with me or you?
I'm with you.
Okay, so let's close out the document entry one. And okay, so let's page down, I want to the whole menu to right there, right there. So what we have is on this business process, I'm going to contrast to what most of the processing that a user would be doing, and then we'll go into the config.
Mm.
Um, so what a business will be doing is in this area, there's also the other area where most of the processing will occur, generally speaking. It is for accounts payable, is invoice processing. Okay. And that is in logistics.
Mm.
So keep it. So we're going to come back to this, and I'll explain what typically happens over here, and then what we typically are the most important points over here, and then I'm gonna also just go up to logistics. If you can go up from logistics, material management, Logistics invoice verification. You see that section? Logistics, open up that window. So in this area right here, most of accounts payable processing occur in the document entry section.
Hmm.
The reason being, let me say, reason being, so you can see the difference there, right? So it's kind of, you gotta kind of know a little bit of, like, kind of know them both. So the reason being is that when you look at the document entries on the financial accounting piece, it's without purchase orders.
Mm-hmm.
When
Yes,
you're
yes.
dealing with here, this is with purchase orders. Right over here is with the purchase orders.
Okay.
So accounts payable, most of their time from account payable is processing invoices, inbound invoices, processing invoices, and reconciling accounts payable or reporting on accounts payable. But most of the time, they're processing invoices. So what you'll have is an accounts payable manager. That manager generally runs the payment program and process invoices as well. But they're managing the accounts payable clerks, but they're usually managing, they're managing the vendors, and then they're managing the payment program, generally speaking, okay?
Mm-hmm.
And they do process some invoices. They're more giving advice. But accounts payable clerk is going to be in this document entry section. If you open up that section, document entry section, or yeah. So it'll be entering invoices. That is Myro. That's Myro. That's that Myro transaction, Migo and Myro. This is the Myro one. Now, that's excluding from, if you exclude it from Vim. Vim, if you had a Vim application, the OCR, where they opticals character recognition processing, it's going to come and it's going to process and hit this inner invoice, this Myro inner invoice process. But 90% of the time, an AP clerk will be enter in that Myro transaction right there.
Mm.
Okay, just for a little bit of perspective. So now we're going to come back here and talk, but then I'm gonna bounce back over. So now you see, I'm just adding some context to the concept.
Yes.
Because why? Is because companies have this policy these days is that we want a purchase order most of the time.
Mm-hmm.
And they have this process, or they're trying to go to no PO, no pay. So a PO gets approved, meaning that we authorize to spend. Right? And you know what I mean?
Yes,
Now,
yes.
yeah. So let's bounce over to the accounts payable section again. If you can close out the logistics.
Okay. You're gonna make a mess. This thing jumps around.
Yeah. And then back into accounts payable. Yep. So there you see. So go into the document entry. Now, all of this document entry and credit memo, where we saw that Migo transaction up top,
Mm-hmm.
all four of those transactions is combined in Migo. Those credit memo and invoice general, but these transactions are of little use.
Mm.
Why? It's because they don't reference a purchase order.
Yes.
Okay. So if you go into one, you're just entering an accounts payable, and there's no reference to a purchase order. So you really have two invoice processing. So you'll know you have really two invoice processing things. Processing invoice without purchase order, and and invoices with reference to purchase orders.
Mm-hmm.
So this is processing without reference to purchase orders, which is limited, and we do less of that. And then mostly 99, 100% of the time is doing with the Migo, with the Myro that we're just showing up there. Okay, so
Okay.
so now it's still got to generally processes the same functions, right? So but It's a little bit different. So
Okay.
just closing out. Huh? Question.
Yes, yes, question. So if we enter a financial document using the document entry and financial accounting that's displayed on the screen here,
Which one? Is it invoice or?
let's say invoice.
Okay,
The question is, I imagine this does not use the GRIR clearing account,
correct. It does not.
but on the invoice verification side, up in logistics, that one does use the GRIR clearing account.
That's right. That's right. That's right. Because it's in the it's purchase order, Migo, the goods receipt, and then Miro is using the and then the Migo is the one side of the GRIR, and then the Miro is the other side. This is just a straight journal entry to the vendor right here.
Okay.
Straight credit memo to the vendor right here. Straight. You have to tell it to offset account. You have to tell it to offset account. So you would come in and say, okay, enter the invoice. You record to the vendor and you record to the expense. This is what you'll be doing here.
Okay.
Now it has its value. It has its value, but some companies do both, but they would do less of this overall. And companies are moving less and less to this as well. Now, there are times when you would need this. Now, if you go back up, when you go back up to logistics, you will see parking documents. Okay. So you go back up into right there, park document, right?
Mm-hmm.
Right. So you see a park document. When you're in the Miro, when you're in that Miro transaction, you can hit park as well. You can just park it. You can be in the middle of the process and you can just say park the document. Parking the document just simply saying, hey, it's not gonna record to the financials just yet, but it's gonna take a number and gonna sit there on the side and gonna be used, gonna get a parking number, but I can come back and get the number and post it after parking it. The parking documents doesn't hit the financials. It just sitting there waiting for you to come back and use it and move it out of the parking status into the posting status. But you would do the parking over here as well. Question?
No, I'm tracking you right.
Okay, so now let's go on down to the other pieces down back in the back.
In financial accounting?
Yeah.
Okay.
Okay. So now so notice that I was just talking about that document parking. You see that document parking?
Mm-hmm.
Or if you open up that tree, so it's all of the processes where you would park a document and then you can post and edit and park and then post a document. Now there are some processes where you want one person to park the document and another person to post the document, so that the same person is not posting and parking. And then this piece kind of can have, this is very similar. You'll find this very similar in AR, in AP, and GL, that same park and post, and you can separate the authorization. It says you can only allow people to park and then allow somebody else to post the documents. But it is parking the document and posting. It's just that kind of process. Now, if you close this out and go on to down payments, it's really a process to pay in advance. It's just paying. It's a process to pay in advance, and where the down payment,
I'm sorry, I'm listening.
the reconciliation account matters more in the down payment piece. When we were talking about the alternative accounts,
Yes.
it's really relevant in down payment processing. Down payment processing. Now, yeah. Mm-hmm. So, of course, what this is what happens in a down payment process. Let's say you you do a down payment for insurance. Another terms of a down payment is a prepayment. You prepay your insurance, or you make a prepayment on some asset. Whenever that happens, you pay a liability, but when you prepay it, it becomes an asset. Why is that, Richard? When you pay for something in advance before you receive the service, it becomes an asset, right? What can you kind of
Well, it becomes
add?
an asset. It becomes an asset because you've invested it into the business money into it, and it's not an expense at that point.
Right.
But it's an asset because um
Because something is owed to you in the future. It has value,
yes,
but future
yes,
value. It's a value, but it has a future value, right?
yes. We don't owe them, but they owe us because
They
we
owe
prepaid it.
us. They
Right.
owe us. Yeah, like a receivable. It's a cash. It's like they owe us, right? You
Yeah.
gave them the money, and like you gave insurance, and so if you were to cancel the insurance, then you get the money back, kind of thing, right?
Hmm.
So they prorated or whatever. So it is paying something in advance. So what happens with the alternative is that instead of the liability, debiting the liability, you can use the alternative. When you pay this vendor, put it over to the asset side, put it over to the alternative account, as opposed to the liability account that you normally book to this guy. Book it over to the asset side because it's a prepayment. You're just using a different account than you normally would because of this particular entry, if that makes sense. You have a reconciliation account for the vendor. Like the vendor has it's called the accounts payable reconciliation account that you assign to every vendor.
Hmm.
And when you say, oh, don't use the regular reconciliation account, use the alternative reconciliation account, and you put it to a prepayment. It's kind of like a down payment. But
Hmm.
now, so that we go into that, but that's kind of where the alternative uh, uh, GL accounts come into play at right in here, and you're really creating a deferred an accrual, actually an accrual. Okay, so now the next item on the list is kind of a bill of exchange. I have yet to implement a bill of exchange, but what it is, it's a financial instrument. This bill of exchange, I never, but it's more European, so we can kind of ignore it for now. But it's more of a financial instrument you use it as like like a receivable. It becomes like a promissory note. Alrighty.
Okay.
So it's like a bill that you can exchange with the bank, and it has value, but it's like a financial instrument that you can use it at the bank in exchange for payables and receivables. Alrighty, but
Okay.
it's more of a foreign European kind of activity that you don't typically see in the U.S.
Okay. It's kind of
So that's
like a
not.
promise to pay, like some kind of a
Yeah, yeah.
contract or something like that.
Yep.
Okay.
Financing agreements and factoring and those kinds of things where you promise to pay within a bill of exchange. Alrighty,
Okay.
but it's more European kind of thing. So
Okay.
um, let's not put a lot of time in it, but just to know that it is a financing instrument that you can pay against it and pay for it. All right.
Fair enough.
Uh, and you can use the payment program to do this as well. So it's kind of already.
Mm-hmm.
What's the
Payment
next?
payment
Huh?
method in country.
Yes.
Okay.
Where are we now? Other?
Okay, other coming right up.
Oh, yeah, so if you pays on down, it's, can you open it up?
Yes. Please,
Other.
please bear with me. It jumps around.
It does, it bounce. Yeah, it's like just a bunch of clearing things. Uh, you don't like incoming payments. You can do that. You can clear. When a vendor has items, you can clear it. You can record something on the vendor account. You can clear the item off without paying it. So, for example, somebody put something in there double. They enter something on the vendor double. You can clear it out of there, or you can reverse it. Those kinds of things. A statistical posting is simply that. It's kind of statistical. It's mainly tracking, statistical values, and then noted items. You can put notes on the ledgers. They don't typically, those kind of things don't have financial implications.
Mhm.
Statistical postings and note items, but they're one-sided kind of transactions and those kinds of things. You know what I mean? Um, so error corrections and suspense accounting. This is kind of a new thing. I haven't used it yet. So error correction and suspense accounting. Haven't used it.
Okay.
Uh, but so you know, it would be something that people could use in the future. I have used reference documents. That's under that kind of, is that kind of under there or no?
It is a separate
Reference,
point, but it's
yeah,
in the same category.
yeah. Reference documents, yeah.
Hmm.
So if you go to reference documents, so now notice that all of these are in the entry section. When you say document entry, they're all a subsection of document entry. You're trying to enter a document.
Hmm.
They're all part of document entry. All of them is a subset of document entry. Okay. Now, account assignment model, if you go in there, is that you can create a account assignment model that has all the posting for you. Let's say if you have 100 lines, and if you want to create, you have to run this journal entry every month, and it consists of pay, um, charging everybody in the department gets a bonus every month, and you have to record each bonus there's 200 people, and you have to give each bonus to their department, and you have to record it as a payable, something like that, right? So you can create this model called employee bonus posting, right? And you would give it a model name, and then you would say the accounts, and then you would go in there and you would put all the debits and credits in there that you would post, and you would save it as a model. And you can come back and reuse it every month, and just reuse it every month. Just go call your model up. You can change the dollar amounts. So if it was 5,000 this month and $5,050 next month, it'll distribute it out appropriately. But it's a little model. It's like a template, like a posting template that you can reuse every month. And you would typically do these things that are reoccurring all the time, tedious, and you can create one-time model you can use over and over and over again. Okay? But it gives it a model name. So if you give it a model, and it's user defined, insurance posting, employee bonus, T&E expenses, those kinds of generic postings, that kind of thing. All righty. So that's what that is. Now that's, you'll find configs associated with it as well. So we'll go back. So now, Richard, can I ask you, go, so let me finish these other two reference documents. The same kind of thing is when you do recurring documents, meaning that if you have a document that you have to do over and over again, you would put it as a recurring document.
Okay.
And a recurring document, you don't change the amount every month. The month is the amount is static. Typically, every month is static. So it'd be like how we book the insurance. Like we prepaid the insurance. It was $1,000 a month, and we prepaid $12,000, and we put the $12,000 in a prepaid account. The the recurring entry will you have to take 1,000 off the prepayment every month because you consumed it. Every month, you peel off 1,000 and you expense it, and that would be a reoccurring. It would be a standard dollar amount, $1,000, and you peel it off the prepayment and you expense it every month. And so you can have a reoccurring entry called, expensing the prepaid insurance, and that would be a reoccurring. The trick to it is the dollar amount stays the same. All righty. And then you can just run a job that runs the reoccurring entries every month. So if just as a quick side note, if you page down to the section called periodic processing. Yes. If you go into periodic reoccurring, if you go in, reoccurring entries will be in there. This is where you can run all the reoccurring entries that you had, that you executed, that you saved. You can execute them. You running this job right here. Say if you have 20 reoccurring entries in a month, you can just execute all 20 of them with this job right here. Mm-hmm. All righty. And then the list is just simply listing all the ones you have, where they are. You ran it for the 4th time, you ran it for the 6th time. It'll show you the status of where it is and how many times you've ran, what's the next run forward, and all that is in the list. All righty. Yeah. So now these are tools that a person that you're going to be consulting with that says, okay, I want, I do this. These are the things that you'll be showing them, and you're going to be configuring to meet. This is what we're doing to meet their needs right here. Mm-hmm. So let's bounce right back up to the sample guy where we were in the references, and I'll try to get through it. Hopefully this is okay and helpful, Richard.
Yes, it is.
Okay, then I'll get to so a sample is the same thing. You create a sample document, but in this case, a sample document has the same accounts, but the value change every month. The value typically would change because of it's a variable factor, but mm-hmm. It's going to have the same accounting underneath it, but it's not like a real amount stays the same. This guy has an entry that changes every month. The amount changes every month, but the posting does not. The journals that it goes to does not. And then you can call up, when you're doing get ready to post a journal, you can call up these entries like post with reference. You see that little button there? Mm-hmm. And you can call up these journals, these samples, these reoccurrings. You see the account assignment model there in the button? Yes. You can call up these models when you're in the middle of a journal. Okay. And call them up. So, and what you would do is that you would go and say, okay, this is how this works. So you'll be able to advise a user, this is how the sample document works. You'll be able to advise a user this is how recurring. So you would practice some, and then we'll go and show you how that marries on the config side. But all righty. So, but then you'll be able to see, hey, this is how you would use a post with clearing. This is how you would use a post with reference. This is using a sample document. So let's go back, but we're still in document entry. So I think it's useful to understand what we're building. Yes. Before we build it. So now that's really we're out of document entry If you page, I think so. You page down. Oh, the payment program is that next one. So if you go to that, that's the outgoings payments. If you open up that last one before the documents, you got to go up. Yeah, right there. That is manual check, manual posting of checks. See, outgoing payments. Typically, this is for a manual payment run or payment job. For example, if you have a check register, a petty cash or a check register, you could use this for the ones and two repayment. This is not the automatic payment program. This is a manual check processing. So you'll record, if someone's recording a check offline, this is where you can enter the checks that are offline, non-SAP, non-automated generated checks. You can run them in here. These payments, you can run these payments. These are like one-off manual payment processing is what this guy's for right here.
Okay.
Okay, so now we're out of document entry. So if you go, those are all the ways that SAP provide accounts payables to enter originating documents in the system, for the most part. And then the second piece is the second menu is documents. And we'll just go through that one briefly. If you close out periodic and go to the second menu under document entry, and go to documents, document. All this is doing, Richard, is reviewing documents that have already been posted. That whole section is displaying documents in some way, or reversing it, or somewhere like that, or mass reversing it, or posting a park document, looking at those reference documents. The reference documents we did recurring or sample documents. It's looking at changing documents, displaying documents, resetting documents, clearing documents that have already been entered. Accounts. You're looking at the vendor balances. So if you were navigating, so if you close out the document, I didn't go into all the different documents there, but just to note that that's where you would be displaying or reversing or changing a document. When you're dealing with accounts and you're dealing with the accounts, you're looking at a vendor account. So the account means a vendor account. What are all the line items for the vendor? What's the vendor balance? Give me a list of all the vendors that have balances. But it's looking at vendor accounts, not GL accounts. But accounts in the GL section would be looking at GL account balances. And the accounts in the accounts receivable account section would be looking at customer account balances. We're looking at, show me the line items for a particular supplier or vendor that we have. So we're going there, okay? Correspondence, there's some, so you can clear. So then correspondence, there is, so mostly in this correspondence, if you can go with the course, you can actually, you can request that the system send a list of invoices to a supplier, right? Send me a list, the supplier says, send me a list of what I have as invoices that you've recorded for me. You would request it, and then the second piece of it, you maintain it. Maintain is that you print it out. Most of this correspondence work that way. Request the correspondence and print out, do the maintenance. You see those two steps there? Request and then maintenance. That's typically how all those so if you're going to you request a correspondence, you'll see like, a vendor list or a list of invoices or something like that. If you go to pick a company, you'll see like here. Show me the differences. Show me the list of the open items. Show me account statement. Those kinds of things. But it's by account statement per vendor. Show me the open items for vendor. Show me the open items for the customer. And then this would be, and then you would request that in, you know, a payment notice with the line item. So you would say, here's a payment notice for the vendor. So for a customer, here is a list of the payments that you have. Here's a notice that you need to pay me. Here's all the due dates on it. And then you can send it to the customer. This is where you would request it. These are some canned correspondence that SAP provide. All right. But you have to request it here. And then when you request it, it's going to ask you, what's the vendor name? What's the vendor you want? And then it'll go to the maintain section and you print it. Okay. That is the account section.
I have a question, Rod.
Yeah.
As far as correspondence is concerned, would you say there's more correspondence happening on the accounts receivable side than the accounts payable side, just because we're kind of communicating with on a receivable side, we're trying to get paid versus
Yes.
on the payable side,
Yes.
we're paying them.
Right. More attention is there because we're the recipients of the invoices. They give us the correspondence. They usually give us the invoices. What we're doing is communicating invoices to customers, right? And so we're giving customers invoices, and sometimes it stays outstanding, and so you have to call them and send them a statement, send them more correspondence, send them dunning letters to get your receipt. You have, but on the AP side, they're sending you the correspondence, and
Right.
usually the invoice, and if you're paying on time, then you'll never hear from them, right?
Yep.
So you'll never hear from them. You're not the only time and then they're not asking you for, give me a list of my payables that on your books. It's just they're waiting for you to pay it. That's all. They sent you the invoice. There's a due. You got the terms to pay it. They're usually waiting for you to pay it. So you're correct. You're correct there.
Okay.
Sometimes an auditor will ask a company that I have say let's say a customer, because it's accounts receivables on their books and it's accounts payables for us, right? Their auditor would sometimes send us an audit request saying, this customer, this company, as an auditor, this company said that you owe them $200,000 worth of receivables. Is that true or not? And then and then can you send me the list of the receivables as an auditor that they say that they have for you? That's an audit process. And so you would typically, somebody is sending you an auditor saying, hey, they said that you owe them $200,000. Do you really owe them $200,000? Can you list it out for us? That would be a request to an auditor.
Okay.
All righty.
Okay.
So now we talked about the account. So then it's really the master data is the next section, is BP, the BP process.
I think I need a little more on BP, Rod. Oh.
Okay.
Yeah.
Master data, yep. Was it master data BP? Now, so yes, so now here is keep this open here. Can you give me all the menus on the master records? Expanding it.
Yes.
Okay. You keep going, open it up. Yeah. Now go back to where I just only see, yeah. Now this is the old menu. Now the transaction is BP, right? The transaction is BP. You don't create a vendor master record anymore. You see where that create is at?
Yes.
So if you went there, it'll be obsolete. If you hit that entry right there, it'll be pretty much obsolete transaction, or it's going to take you to it's going to say, I'm going to BP. Right? This transaction would take you to BP, but it used to then, it's saying, hey, now I'm going to take you to BP. But you can see that it says a vendor record. when you can just go to BP and do all of it from BP, right?
Mm-hmm.
That transaction, if you were to, you know how you can put your transactions on on your menu? You know how to do that, Richard?
Look at this mess. You see this?
I see it.
Look, I'm still scrolling. I'm sorry. Sorry to derail you.
Oh no. If you go back, yeah, yeah, right, pretty much. A vendor has with the BP, with new function on the BP. Right now, it's a business partner, right? So that business, they went away from a vendor record, a customer record, a bank record, all that to a business partner. Now that makes the business partner more broader, right? As opposed to a vendor or customer. Now, a BP can be a customer, but the BP can be a customer. The same customer can be a vendor. The same vendor can be all these other leasing agent and all those kinds of things. You remember we had to create a BP role for a vendor for leasing
Yes.
because that role now is a business partner role because he does leasing for us as well, right?
Mm-hmm.
He's not just a normal vendor. So there are going to be some fields that I want to keep track of him because he's a leasing agent, right?
Mm-hmm.
So now when you create a vendor or a customer, it is created centrally, just like your um, GL accounts. You know how
Mm-hmm.
what we talk about the GL accounts, you have to create them centrally
Yeah,
at the
company code,
top,
chart of account, then central. Yeah.
and then you have to assign it to the company code. And or
Mm-hmm.
you can do it collect, you can create it in one step or two steps. If you create it in one step, you create it centrally at the top level, and you create it at the company code at the same time. So that customer or that vendor is only assigned to one company, but the vendor can be assigned to multiple companies. So, but it's going to be centrally assigned. It's going to have some data that's central, like their address, their role. All that data is central, and then you have company specific data. So you can have this vendor can be assigned to company one and company two and company three. Now, all of this is doing that for in the BP. So all these menus right here, you can now do in the BP.
Mm-hmm.
So we can go to the BP, which we'll go to the BP, and we'll talk about centrally, company specific, and the different views. Now, of on the accounts payable, you have a let's go to a BP if you a BP
Okay.
transaction. That's going to be for the master record. We'll go there first. You can just enter the transaction BP.
Okay.
And okay, yeah. So now um, go for a vendor number as opposed to a customer over on the other side. By, yeah, and then we'll get the first 100.
Okay.
Yeah, run that start. See it, run that start. So you can take the number out or.
A minute.
Huh?
I'm in the master now.
Oh, okay. Let's go back.
Okay.
Back one.
Uh,
And execute it again. And run start 100. It's gonna give you a list. All right, so now that's a list of 100 vendors. We could have put a number. We could have asked for names, or let's page down and see if anything look. Okay, let's grab any one of them that looks a little bit reasonable. Best Buy, Thermal, any of them. Okay, so now look at all. So when we're looking at this vendor, it's going to have multiple roles. So this vendor, if you look, if you do the drop down there, where the general, this vendor is going to have multiple roles in here. One role is going to be financial accounting, financial services, and one of them is going to be purchasing. Do you find a purchasing in here? Go to that, yeah, go to that S supplier down there. Alrighty. So as you can see, if you can see, is that you're kind of in the general data tab. All those tabs down at the bottom, right here, is data that is generally maintained for this vendor. Alrighty.
Mm-hmm.
And it's good. Now, if you go and say, go to the tab at the top there, go across the top, it's going to be company code. Right, hit that. Now now you're gonna be going into a different set of tabs. They're gonna be company specific. So notice these tabs are different than the general tab that you were on.
Mm-hmm.
So notice you can bounce back and forth the general tab or to the company tab. The general tab now replace the company tab, right?
Yeah.
Okay, so now those general tabs are going to be shared. Now go into the box that says companies. There's a box right in the middle. No, the one that, yeah, you can do it that way. Or you can do that. Yep, yep, that one. That's all the companies. That's companies that this supplier is assigned to. He does business on company one and does business with DE15.
Mm-hmm.
So if you select one, click the button and then adopt. It's going to bring one over and it's going to give you all the fields that's associated with one, all the settings for one. You know what I mean? These are all the settings for company one. And if you bring over the other company, it's going to bring you all this. So if you page down, this is the vendor payment transactions, the vendor correspondence. Those are all the tabs that are company specific. Yeah. So you can go to either one of them. Those are company. So payment terms is company specific. All the other terms in here is company specific.
Mm-hmm.
You know, and then you can switch over to general data, and then you can go. And a vendor is going to have purchasing data. Like if you do more, you're going to have a purchasing view, and if usually as a role, see if it's purchasing. Yeah. Let's see.
Yeah.
Hmm? Yeah, so it would be changing the role or something to be more central to a role. I don't see. Is there a general? There's a. Do you find anything that looks more like a purchasing group? Yeah, it might be one of these groups here that has. You can try one that will show up. But so a supplier is going to have those three views on the side. It's going to have what? It's going to have a general view that's going to be shared by uh, both the company code and the purchasing view. So there's going to be a purchasing view as well, right?
Mm-hmm.
And there's going to be a company view that's going to be going to have its own view. That's going to be so. So if you hit that button, that little button next to this, the other button, it's going to tell you which views are maintained. There's only one view maintained in this guy. If you had all those other views that were maintained, you will see all the roles that are maintained for that vendor by double clicking on that little button to say, hey, these are the only ones that have been maintained. All righty.
Okay.
But you can have all these, you can see how when you set up the BP and the customer, you're going to be assigning these roles to these account groups, which is going to, that's what's visible in that list that you're seeing now. You see how you're controlling what roles are assigned to what groups, and then we'll get to that. Okay, because
Okay.
this is an account group that's being assigned. This is an account a GL account group, and then you're gonna assign this group is gonna have how many roles can this particular supplier have? Can this supplier be a purchaser? Can it be a leaser agent? Can it be a company code or just simply a purchasing group? You know what I mean?
Mm-hmm.
You get to dictate when we talk about the config how many roles that the vendor can have in this particular account group. All righty.
Okay.
So now typically the main three of views, roles and views would be general, that's shared between company code and account and purchasing. And then you're going to have a purchasing view. It's going to have all the tabs and all the fields that are going to be important for purchasing. And then a company view is going to have all the fields and the tabs that are going to be specifically for a company, like the account, the terms, correspondence, who's the clerks, those kinds of things. Check for double invoicing and all those kinds of things. How do you pay them? Do we pay them by check or ACH or wire? Those are views that you're gonna have. All righty, and then you're gonna have
Okay.
purchasing views that are gonna be strictly kind of purchasing things that are gonna be dictated for purchasing. Like what's the currency they use to buy with, what's the terms of the purchase order, and so on and so forth. Eco terms and other kinds of payment related terms.
Mm-hmm.
So now we'll go further into this view, but notice that it's roles, it's BP, it's account group, it's multiple views, multiple companies, but it's centrally and it's company specific, in this purchasing group. So you have your purchasing org, your company code, and you have your business roles and all of that kind of coinciding. And now I must say something about vendors or master data as well as configuration data. Let me give you a point. Can you close this guy out and
Yes.
go to the company view again? Go to the company view. Yeah. Do payments. Yeah, grab that company. Get the company get a specific company that this guy's relevant for. Yeah. So you would select the company and adopt it. Now it's going to bring the company's. Did it do anything? Then that role has not been maintained. So go select the business role.
Oh.
The business role is not found. The business role is that guy. He's the only one that's been maintained. So
No, ain't no company for this one.
okay, then go get that. It was that. Yeah, that was the guy who was maintained. He's the only one really maintained. So notice, go down, page down. Notice you got the reconciliation account. Page down to the payment transactions, the vendor payment the tab, the different tab. Okay. Okay. So now I want to just check. Like, notice you can assign a tolerance group. You can assign. Notice how you can assign the payment terms. You can assign the tolerance group. That's a config point. You can you can assign check cashing times, which means how long before when you send them a check, how long do they cash their check? The system is going to keep track of it. Like so, for example, if you send them a check on Friday, they only cash it not on Monday, but they cash it next Monday. And they always do that. They always, you send them a check on Friday, they don't cash it the next Monday, they cash it the Monday after. So it's like a 10-day float in there. You know what I mean? It's going to start showing you every time you send them a check, it's 10 days before they pay, they cash it. It's 10 days or 9 days or 8 days. So you can kind of see the cash movement with this particular event. You see where it says check double invoices?
Yes.
So certain indicators on the master records, on any master record, dictates the process. Let me repeat that. Configuration data and business processing settings dictate how the process goes. If I never check the double check invoices, the system will never check for duplicate invoices on when we process against this vendor. So it is dictating what happens on the process. When you use this vendor, if you don't check for double invoices, it won't check for double invoices when you process the invoice. But if you do check for duplicate invoices and you have that button checked, whenever you process the invoice, the system is, and if you use that invoice number that use that amount, it's going to say, hey, this is a suspected duplicate. And you can tell the system to error out on that or give the user a warning. I've seen this number before. I've seen this company, this vendor, this amount, and this invoice number before. Like, you know, for example, somebody sent you an invoice on Monday and you entered it, and they accidentally sent you that same invoice 3 weeks ago, and you entered it again. But you know, because they accidentally sent it to you a second time. You know what I mean? And then you got it in the mail. You open the mail, you think it's a new one, and you try to process. It'll tell you, "Hey, this is exactly the same one you just got. Can you go check it?" And so, can you go check if you got a duplicate? Then you go and look. And you say, "Hey, I got this one already." That kind of thing. But it's the configuration data and settings you put on the vendor on any master record. Customer, a GL, a cost center, a production order, all those things control whatever happens downstream. Okay, control the process. So now, so we're out of BP, and we got a few more of these guys to close out, and we'll get into the configuration. But you gotta marry it with creating that record in all the different views you're gonna have, and we'll go deeper. And I'm just skimming the surface on that master record there, because there's so many fields in there that control a lot of different processes. Like if you go back in the business, you can tell the system to calculate interest on accounts payables that are overdue and charge an interest charge for all the overdue payments, all the overdue invoices from a vendor or customer. All right.
Okay.
But the setting is inside the master record, but you have to configure the pieces in the configuration, and then you put it on the map, and it's going to control a processing procedure. So if you can go down now to periodic processing, because we got out of the master record, right? Was the yeah. So these things are monthly things in periodic processing, right? You got the payment programs, which you do. You don't do every day. That's basically saying you don't do every day when you deal with it. You don't print. You don't do reoccurrings every day. You don't do automatic clearance. You don't do dunning, and you don't do calculate interest there. You can run the payment program on a schedule, or you can run the payment program, or you can do a schedule manager. That scheduler manager is kind of a scheduler that you can put all your activities in there. That's a neat thing to know. A schedule manager, a lot of people don't know how to use the schedule manager, Richard.
Mm.
But that is programs, all the different programs and tasks that you can put on a calendar. And you can put steps and how the sequence that they need to go. If you look at that calendar, it's a calendar. It's like a closing schedule, but you can put a schedule for any user, all the tasks they need to do every day and all the things that within there and that within that process. All righty. And so you can build them a roadmap of all the things they need to do, and it'll kick it all the programs that need to run, and it'll have all the settings and everything. You know what I mean? And it's called, you use it a lot of times for fast closing, things like that. Okay.
Okay.
But it's a unique, if you see fast closing, that would be a, sort of um, a unique process that uh, companies could use or they don't use, but it's a it's an extra factor. You know what I mean? An extra setting that if they wanted to use this. All righty.
Okay.
But periodic processing is all those things that don't occur daily, but they occur weekly or
Mm.
monthly or annually, those kinds of things. So you'll see there's still tasks in there, like recurring payment programs. You typically run a payment program, like you do checks on Wednesday, ACHs on Thursday, those kinds of things. You know what I mean? You don't run payments every day.
Mm.
Um, and and then you can see there's some closing transactions. If you go into closing, it's going to be in that closing window down there. Do you know what Dunning and all those? You got any questions about any of those?
I think Dunning, that's kind of like the communicate like correspondence, right?
Right. It's,
Mm-hmm.
it's just that you for receivable, it's that communicating to the receivables again.
Mm-hmm.
So when they're 30 days past due, you can send out a Dunnings for 30 days. When they're 60 days past due, you can send out a more harsher letter. It's a
Mm-hmm.
letter saying, "Hey, you overdue," and you can escalate up to four levels, and then you can before you send it to collections.
Yeah.
But you can
Um,
send harsher letters, huh?
I remember reading up that they were saying there's some kind of additional program that you can use if you want to have more of a interactive approach to the Dunning or correspondence. There's a bolt-on application. I
Okay.
forget what it's called.
Oh, okay. So,
Mm-hmm.
so, but these are periodic things that the user would be doing. Now let's go on down to closing. These are kind of just closing steps that you would be running doing a typical, reclassifying, carry forward. That's an annual thing. Like when you like carry forward, that last one, it's like when you come out of the year, like
Yeah.
in 2024, you
Mm-hmm.
carry forward all the balances from 2024 to 2025. So you open up 2025 with the closing of 2024, those kinds of things.
Mm-hmm.
They carry the balance forward to the next year.
What they say is be something like period zero in table AC DACA.
Yes, sir. Yes, sir. Yes, sir. Yes, sir. That is no people. A lot of people don't know that. A lot of people don't know that one.
Mm-hmm.
Period zero. Where's period zero? That's the opening. Uh, and then reporting withholding. So now and then you got reporting, you got withholding taxes. This is where you would do 1099. Reporting is just simply reporting is going to show you some generic reports um, um, that's related to the one that we would typically use is just generic one. They got some company specific ones, but you would use a new generic one.
They got all foreign.
All foreign, yeah. So usually there was a generic one that's the U.S. will use. But withholding taxes is where you would do 1099s. That you for your vendors when you pay your vendors, you have to send them a 1099 for certain qualifying vendors. That's where you would do that in the withholding tax piece. It's a tool to run the 1099s, and it will be U.S. based. All righty.
Okay, probably be in the general.
Yeah, general. It will be in the general. For where now, if you set on the vendor master to be subject to withholding taxes, then it would be subject to withholding. If you don't, then you won't get the reporting out of it, right? But it's a vendor setting, okay?
Okay.
In a config setting. And then information is reports. Running some reports for accounts payable, your line items. I see how that thing bumped down all the time, right? It's
I'm
weird.
telling you, it's
Everything. So you get
it's like wax
you can
on,
get
wax off.
yeah. So you can get your vendor balances, and then the last one is environment, and then you went through the whole accounts payable menu. Environment, you're gonna have checks, other kinds of things in there. Um, you know, uh, environment.
Oh, there it is. Sorry, I got lost.
You're just gonna have some general stuff. User settings, um, check items, like user parameters. You can just set certain things that you want, how your open items to look, how your normal other things to look on your processing, your control totals, current settings, those kinds of things.
Mm-hmm.
See, exchange rates you can enter in here. These are just some oddball things in in the uh, in the environment. You can look at your check register. You'll see under there on your environment. This is like exchange rates, define account clerks, just oddball kind of thing. What's the interest rates? The check information. You see, so if you want to cancel checks, void checks, you would do it in this that check here. So you see pays down, you see void. This so now notice it's in the environment. The check information where you would cancel, void checks. Say if a check was, customer say I didn't get my check, you sent it 2 weeks ago, and they say, well, you want me to void it? You would go into the void menu and you would avoid you or cancel the check depending on the circumstances. But if you go page down, it'll call up all the checks that's been issued. Is even give you a check register about the process. So now you've been through the accounts payable that the user will know. And if you know all of the things that the user would know. Now it's like, okay, I know all the settings that I'm going to have the user do. Then I'm going to go and marry those configurations for that. Now let's go back up and kind of close out in the logistic invoice verification section
Okay.
where most of now there are some things you process in there, your accounts payable. There are things you do in it, but now you know what's available in that for an accounts payable clerk and an accounts payable manager. All righty. So now if you so now that's what this is who you're setting up the system to meet their needs. Now if you look at these um, 5 menu path. If you go and open up all of them, it's going to be much shorter than accounts payable. Then then you can probably go and do them once, and then we'll have them all. Right?
Mm-hmm.
The automatic settlements. GRIR, and I think you're good. then archive. Okay. All right. So we got a good mix. You got them all. Now you can just use the that's how probably how you have to do it, Rich, is hit the
Yeah.
explosion and then just have it all exploded, and then now you can just go. You know what I mean?
Mm-hmm.
So if we start from the top, now if you go into that enter invoice transaction, enter
Okay.
invoice, yeah, that is a Miro transaction. It's going to be asking for a purchase order. If you see right below in the middle section, if you page down, that's the header data. That's for the invoice information. But notice it's asking for a purchase order. This is the one the accounts payable people will be looking at most of the time. Say, give me a purchase order number, enter a purchase order number so that I can process the purchase order. But I have to have a purchase order that's been approved so that I can pay it. If there's no purchase order in there, I can't process the invoice, right?
Mm-hmm.
That kind of thing. And then this is primary. And then the trick is to know this as best you can, know this process as best you can, so you can be ahead of the user, so you can train the user on how to use it.
Mm-hmm.
You got to train the user on how to use this transaction.
Okay.
So now it's saying, okay, um, if you're trying to train a user on how to use it, you got to know this transaction, code, and then you got to know the configuration points behind it, right? So the user said, well, can I add this and can I add that? Then you say, yeah, well, let's go consider this tolerance or whatever, right? Or can I do? Will it will it check for duplicate invoices? Yeah, yeah. Well, let's make sure that this is set right. But
Mm-hmm.
you have to know this process so you can train them on how to use it.
Mm-hmm.
That's number one, right?
Okay.
And then you have to know how to control the configuration behind it so that you can advise a user on how to make it their own. This is canned. This is how it looks coming out of the box, which is
Mm-hmm.
good. I mean, right? This is how it's going to look coming out of the box.
Mm-hmm.
And now you got to make it. They got to add their vendors. They got to add their flair to it. They got to add their little something to it. And so
Mm-hmm.
that's what the flavor that you're giving to the user. Make it your own, and then you're going to configure it to control how the process is, what things are controlling the processes in here.
Okay.
Like for example, um, if you bring up a purchase order and it's a difference, and you have to add it to unplanned delivery, right? So if you create a purchase order is for $1,000, and the invoice is for $1,010, right? There's a screen in here that says unplanned amount, an unplanned $10 unplanned amount. So what it will do for that unplanned amount, you can control how that $10 react. So it's plain says when you put something in the unplanned delivery field for the $10, it can go to one entry or it can distribute across all the line items. So if you had 10 line items on the purchase order, it would give $1 to each line on the purchase order. It'll add $1 to each line. You follow me? It'll
I get it.
distribute it, huh?
Yes, I'm tracking.
Or it'll go to one line item that you tell it to go to. But that's a configurable point inside of that. And hopefully we'll get to explain it. But it's saying, okay, now you got this window here. This is how you use it. And so on and so forth. Like, for example, notice it has a purchase order tab, a GL account tab, a materials tab, and there's an asset tab, right?
Mm-hmm.
And I hardly ever see an asset tab.
Mm.
So what that means is that you can even add. So if you can put that $10 to a separate GL account, or you can add a new material into the purchase order didn't pick it up, you can add a new material. If the purchase order didn't pick, you can add a new asset. And if you pick that, then you can add additional items into the purchase order from here. But okay, so knowing this guy, Cole would help you train and help you configure.
Yes.
Because you know what you're trying to do for the business.
Exactly.
Okay.
Exactly.
Okay. So if you go back out, let's back out of this. The rest of it is kind of parking, reversing. If you go further processing, you can run the job in the background. You can go display those invoices. You can cancel those invoices. If some of them get blocked, when you're saying those block release, you remember you had a config point about release blocked items,
Yep.
or the blocking codes.
Yep. Payment block reason codes.
Yep. So you can see you can release from block here, but it would be those block reason codes that you talked about over in the config level. If you go down to let's go. So these are just other different settings for when the document is in it. If you go down to the automatic items, automatic settlement page up. So if you stop here, something is called ERS. Some companies use it, some don't, but ERS is evaluated receipt settlements. Meaning that the invoice will be automatically processed. We're not going to get an invoice from you. I'm gonna automatically process the invoice on your behalf, Richard, and I'm gonna pay you for what I'm gonna pay you for this amount. Why would I? I'm saying you don't have to send me an invoice. I'm gonna pay you. I'm gonna automatically settle the purchase order. So you create a purchase order, you create a goods receipt, and then I'm going to automatically invoice through the ERS system, the evaluated receipt settlement, and then I'm going to pay you based on that. Now, why would you do that? Let's say if you have a long-standing relationship with a vendor, you've been in business for 15 years with this vendor. He's going to charge you $10 for every part of this part. He only have one part. He give you 100 of these parts every week. You need 100 of them every week. Every Monday, he's on time. He gives you 100 of them every week. It's $10 each, and you went to his daughter's wedding. You have a relationship with him.
He say what he mean, and he mean what he say.
That's right. So he give you got a purchase order. He gives you a goods receipt. You pay the $10 for the 100 units every Monday. You send him the payment, because you don't need to send me the invoice, because I already know what you're going to send me. So you can run, if you have vendors and relationships like that, you can create something called evaluated receipt settlement that you automatically pay. Bam. So now I don't have to be processing invoices, right?
Right.
I'm streamlining the process because we good. We have a great relationship. We know the prices. We agreed upon the price. I got the quantity. The quantity was confirmed on the goods receipt. I'm going to pay what the quantity I got based on the contract price that you and I have settled on. $10 for every one. I know the quality is good. I'm going to pay you $10 for every one I receive. And I'm just going to record the payment through this process here. Don't even have to send me. It saves time for them. It saves time for me. We don't have to process these invoices. That's what that means right there.
Okay.
And then
That yet.
Huh?
I haven't run across that. This is my first hearing about this one.
Yep, yep. And so these are just kinds of some other and then these are some kind of these invoicing plan. I tried to use the invoicing plan for the PPOA, but it didn't work. You remember we were trying to use that invoicing plan on the purchasing side?
Yes, I do remember wrestling with it.
Yeah, and we couldn't get it to work because it was just the user was it was just odd.
Mm-hmm.
But the invoicing plan is like if you have a rent and it's for every month on a purchase order, you can create a purchase order with the monthly rent payments, and there will be an invoicing plan on that. And then you can run a purchase order to have a rent invoicing plan for every month. Okay. But it just didn't go well with the approval process.
Right,
But
right.
you could run this invoicing plan where you don't need the approval, and you can run a rent, and you can have those kinds of invoices automatically schedule the rent. If it's like $500 a month or $1,000 a month for the rent, then you can have it reoccurring and automatically posting here as well.
Mm-hmm.
All right, and then of course the GRIR maintenance is when the you've gotten the goods you got a purchase order for 1,000, the goods receipt came in for 1,000, the invoice comes in for 980, so that leaves $20 out there in the GRIR.
Mm-hmm.
And you typically will say you let it sit out there. Well, maybe they're gonna invoice me for the other $20, right? But they don't. 6 months later, you still had a purchase order for 1,000, a goods receipt for 1,000, and an invoice for 980, right? Because you didn't know it was 2 cents. It was 2 cents off. They changed the price and reduced it by 2 cents, and you never caught that on your purchase order. So they only billed you for the amount less 2 cents, and they never sent you another $20. Now it's 6 months later. You can use this transaction to clear out the $20. It'll go out and say, okay, here's the difference. And I'll make the adjusting entry automatically. It's called maintenance to GRIR, and it'll write that $20 off appropriately.
Okay.
But it's only handled for those, like you say, okay, well, give it some time because you don't know when they're gonna send the delta, the difference. But so it's to handle a tolerance. And if you go in there, you'll see how much of a tolerance you want to clear out. You say, well, do you want 100%? You want 50%? So you would run this, and
Mm-hmm.
you'll say, yeah, see what you're asking for tolerances and those kind of things. Is it a delivery over or a GI over? And you can and it'll come out and give you. You can say auto clear, or if you don't click the button auto clear, it's a manual clear. Then you can pick and choose the items you want. If you don't select auto clear, then it'll give you a manual list of items that are eligible. You know what I mean?
Mm-hmm.
But you can you can pick the purchase orders off the screen. You just give me a list. You say a list of purchase orders that are old, more than a year old, and then it'll bring them up, and it'll show you the delta: $20, $5, $10, and then you can just run those and clear them out of there.
Mm-hmm.
So is it a delivery surplus or invoice surplus? You see the button right in the middle,
Mm-hmm.
right there.
Yeah.
Is it a delivery surplus or you would check for both? Um, Meaning too much of a delivery or too much of an invoice, and then you can pick your invoice, the purchase orders. I typically advise, you know, 6 months old, 9 months old, then go look for them.
Okay.
Okay. Go look for those items. So now I understand. We didn't get into the nitty gritty of the configuration, right?
Right.
But it's a takeaway that you see that this is what you have to train the business on,
Mm-hmm.
the user. If you go into a greenfield, the people don't know. I don't know SAP. Well, I got to train you on how to use the Miro, right?
Mm-hmm.
And then I got to know the Miro code, and I got to configure the Miro so that it'll be what you need. And then so then we got to run the payment program. I got to know the payment program code so that I can train you on using it. And I got to be a trainer on the payment program, right? And then
Mm-hmm.
I gotta train you on how to use the payment program, and then I gotta configure it.
Mm-hmm.
So 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 which one you think should go ahead of each other, or they go jointly? You gotta just bounce back and
Well,
forth. You gotta go bounce. How you think you learn best that way?
you know, Rod, so I learned first on the config side, right?
Uh-huh. Uh-huh.
How the adjustments that can be made. And now going back on the application side, it's the application side is, I want to say, is now crystal clear
Okay.
because I'm seeing what the configuration points are already. In fact,
That's right. That's right.
I got like I like to say at least half of them memorized.
Right,
So
right,
when
right.
I'm looking at the actual application activity, it's like, okay, this is just raw data entry and selecting what's available here.
That's right. That's
But,
right.
but on the other side, I'm pulling the
You
strings to
controlling what
make
they
it work.
see. Yeah,
Yeah.
you
Mhm.
controlling what they see and how they see it.
And it's
Those
way
kind of
more
things.
detail. It's way more detail on the config side. So coming back on the application side, it's like, oh, okay, it's like watered. I don't want to say watered down, but it's easier to take in.
Yeah, we're only showing you the processes that are being used, but you're building on the other side, right?
Hmm.
You're
Hmm.
making it easier for the user because this is what you're building, right?
Yeah,
You're
yeah.
building,
Okay. It's like say it's the difference between going to Home Depot and versus walking into a house. You know, the
yeah,
application side is walking into the house, everything's all put together.
yeah,
But you
everything
go to
I put
Home
together.
Depot, you got parts everywhere. You got
Parts
it's stuff
everywhere.
everywhere.
That's
Yeah,
right. That's
you
right. And
know.
you got to kind of configure it to meet the
Mm-hmm.
needs to make it a nice little clean little place to walk in and wash your hands and But that need to be a toilet. Use the bathroom. There was a toilet there somewhere,
Yep.
right?
Yep.
And
Mm-hmm.
some pipes and some water and some
Mm-hmm.
that kind of stuff.
Yeah, I'm tracking. I'm tracking. I think for me personally, I like how I did it. Coming in on the config side, then bouncing over to the application and being
Now
able to marry the two.
right now when you bounce back over to the config, you'll see okay. So now let's take and then you can take one particular area and then like okay. So now let's go over to the config for accounts payable.
Okay. Do, do, do.
You tell me where it's located.
Here she go.
Is that it?
Yes, sir.
All right. So now, what about that logistics piece?
Ah, that must be up there and
So let me show you down here. Let's go to it's down at the bottom. So close this guy down and go down to inventory management. Uh,
inventory management, material management.
yeah, material management. Logistics invoice verification. You see it down
Yeah.
there? In that puppy, you're working in this section here as well.
Mm,
That section here. So that section is accounts payable.
mm,
On what I said, 90% of the activity is going to be occurring for most AP people is in here.
okay.
So you got vendor, you got blocks, you got, now, so you got the two sections. Now, if you go back to the top, the main piece that's in that top piece is that the account payable program is up in that vendor payment piece. It's not in the banking section per se. Some of it is in the banking section. Yes, some of it is. But the accounts payable program is in the business transactions. the outgoing payments, and automatic payments right here. This section here is um, a must know for account,
Mhm.
you know, for payment programs.
Yep. Yep. Mm-hmm.
Okay.
Yeah, I got many of these memorized, but
Okay,
they're
great.
filed in my head. They're filed away in the bank accounting section. But sure enough, here they are.
Here they are, right there. And that's where they sit
Now,
in this.
question, Rod: are these config points also in bank accounting?
Now,
Hmm, that's
so
interesting.
let's go check. So,
Okay.
so you go, you see where they are right there. If you go page down into banks, in the bank, and if you keep going, you hold down, see a bank accounting.
She is.
You're going to see business transactions. So you got the house banks, you got lock boxes.
Now, lock boxes. I thought that was for a cash application.
Yeah, it is for cash application.
Now, cash application is not standard SAP licensing, though, is it? It's
Say it again.
additional. The cash application that requires additional licensing, don't it?
No, not really. No, no, it's part of AR.
Oh,
If you
I thought.
buy a bolt-on or something, but the standard one, lockbox processing, lockbox is just what a file you get from the bank, but it's a file you get from the bank that you would bring in the SAP to clear out your receivables.
Hmm,
Okay?
I thought that was
And
exclusive to cash application. Uh,
yeah, it
and you're
is.
saying cash application is standard SAP?
Yes. What's your thing? What you think it was,
I thought it was a
Jim?
bolt on.
No, no. Yeah. So here, I can bring in a lockbox, or I can bring in an electronic bank statement that also can apply to cash. So you can see here, you see the bank accounts. If you page down a little further, and on the banking, but you won't find the accounts payable business transactions. The accounts payable programs are not, the accounts payable program is right
Mm-hmm.
here. You're going to see payment transactions. Let's see what that says. Yeah, that's payment requests. Um, that's kind of electronic banks. Yeah, these are other kinds of payments things.
Mm-hmm.
And then electronic
Mm-hmm.
statements, the electronic bank statements is what we went through once. We
Yeah, that's
talked
a
about
biggie.
one. Yeah. And then lock boxes under that. But it's really banking transactions between now. Who's to say? Yeah, the account payable program is the banking transactions as well. So whatever you feel comfortable with, it's okay.
Okay.
Yeah,
Okay.
either one will do. It's okay.
Mm-hmm.
Yeah, that doesn't it doesn't it does. So so now you see where you got two places for accounts payable.
Yeah, the logistics invoice verification and also
Yes,
on the actual accounts payable.
accounts payable section. Yeah.
Mm-hmm.
Okay. Now, and then you'll see in the logistics, uh, um, yeah, so you can set certain things in this accounts payable, like, tolerances, groups, clearing layouts, and the payment program is kind of the meat of the matter.
Okay.
Um, Most of it is, standard that I use, accounts payable, the standards that I create a few tolerance, some more reason codes, add some clerks, those kind of things. But I configure the payment program, right? But I add
Mm-hmm.
some clerks, add some reason codes, add some tolerances, and the rest of it, add some payment terms. Rest of it, vendor number range, account groups, those things you went through. You add the groups, somebody would say, well, here's my clerks. Did you see defining accounts payable clerks?
Mm,
I didn't see it in your
no, I
list.
didn't.
Mm-mm.
I
So
didn't. That was not a point.
okay, so let's get together again and continue to do that. It takes just a little bit more.
Yeah, and
All
it's
right. I was glad to be able to go there. But I think next time we will go into so we've kind of given an overview of that. We don't have to do that anymore.
okay.
And now we can just go kind of like marry the config to that process, or go buy that lumber from Home Depot and then take it to the house.
Yep. And I'm with
Right.
it.
Go take
Yep.
them pipes to the house.
Yeah. Yeah. If it takes several sessions to go through this,
All
absolutely,
right.
it's fine. That's what it takes.
All right, boss.
Um,
The
same time next week.
Yes, sir.
Yeah. I'll put another one out on the schedule, and I'll reach out to you uh maybe a day or so in advance to be sure it's okay.
All right, sir. We're gonna grind this out.
Yes. I appreciate it, Ryan. Thank you for your time. Please try to get some sleep.
Oh, I'm gonna get some. All right. God bless you.
You as well. Lord keep
All
you.
right. Yeah, please. Thank you. Bye.